Today, folks, we're diving into the insanity that is about to basically unfold in front of our eyes. Not only do we have earnings, but you guys are unloading the insane amount of questions that will probably kick this live stream off to keep things excited because we cannot lose. I feel like if you were losing money in this market, it's because you're a degenerate gambler who can't get away from, the hype stocks that everyone wants to love and discuss, just like every other hype cycle that comes around, baby. Because, man, it just every time I log into my accounts at the end of a week, I am shocked that it's just always ending at a much higher number than the week before, the month before, the year before. It's almost staggering. And I hope everybody's experiencing something very similar, just being lucky enough to be born in the Western world with an extra dollar in your pocket and being able to throw it in this can't lose casino is absolutely brilliant. But what stocks are you keeping on your watch list, and at what entry targets are you looking at? Like, I should keep a list around for the stocks. We're going to talk about some in this video when it more pertains to the dividend side of things. But yeah, I'd love to know what your stocks are, what price points you're getting in. I keep an eye on the hype ones like Tesla and stuff, but I need like material pullbacks or some black swan event before I'm going to get excited. Like, the whole market needs a pretty big drawdown because I don't see anything that's like super favorable out there right now. What do you think of the BOC cuts this month? I think we're still going to need a bit more time. I'm sure the markets will swing off whatever the news is, and whether it's 0.25 or 0.5 doesn't matter. I think we're in the cut cycle and it's going to persist. The thing we need to see start happening is that it actualizes into the earnings report. So companies that are obviously, heavily debted, infrastructure oriented, interest rate sensitive, your real estate out there, those stocks I think are going to start really shining here. Probably it's still going to take a bit of time, but I think 2025 is going to be the big year. I think for a lot of stocks, I think we are actually in a very tough market environment right now, and it's really hard to wrap our heads around. But I think a lower interest rate environment is going to change that. Hopefully, the geopolitical stuff starts to cool off a little bit. Thoughts on Tesla robotaxi event next week, my buddy? You're all over the you're all over the news this week. Can't even get into it. I have no idea. I've stated many times in my videos about Tesla that I think it's going to be. He says that they have multiple things to announce, and that's where I'm going to be more excited if there's more like robot insight. I think if there's no big like robot insight, then I don't think the event matters that much, other than it's probably going to be some low end vehicle that they might start with robo taxis. But it's a technical, like, I think it's going to lead up to a lie where they're going to be like, oh, every car at the flick of a switch was supposed to become a robo taxi, but guess what? Because of regulation, we're only going to be allowed to operate these specific vehicles in these specific regulated areas. You won't be able to turn your car into a robo-taxi. I mean, I'd be very disappointed if that's what the event actually ends up being, but I'm quite concerned that that's going to be the take. Follow up on Q2. What impact do you think the BOC cuts? Yeah, we talked a little bit. I'm going to jump on the questions. Absolutely. Nvidia AI Summit this week. I think Nvidia has reached its peak hype. I think even if earnings are good, I think it can grow a bit, but I think Nvidia has finally reached peak hype. We need to see some actual like materialization. Like, I think the last big thing out of Nvidia was the fact that you could just like text to building like 3D environments, which was a huge ordeal. But at this point, it's like, I think Nvidia is going to start, again, burning out. It's going to start reaching its peak potential here at some point. Like, we're starting to see the leveling off of growth already. And then once that happens, it's just like, I think Nvidia will go through its inevitable cycles of its ups and downs, because it's hardware. It's like selling shovels to the picks. Sometimes mining's hot, sometimes it's not, right? So I think that's going to be, again, I'm not saying it's not a good long-term hold or anything like that, but I really want to see the fruition of all these chips being bought up by these mega cap players, which control Nvidia's future. Meta, Amazon, Tesla, they're all controlling the future of Nvidia, and they're all starting to produce their own chips. I've stated this many of times, but eventually what I want to see is, like, right now, most of the clip arts that I've been making for the last few days, week, whatever, like, I've been using AI a lot just off of metas to generate the images that I use as the backdrops now. So I'm like utilizing it in editing. I've talked about Pictory and some of that stuff to some extent, but I really want to see the lift off of that. I mean, we just saw the strike, I guess, in the ports. That didn't last very long. Everyone was so concerned about it, and it didn't last like a week. But that port strike, I think, also shines some light on automation, because I think China introduced, like, a few years ago, like, the first almost fully automated shipping, port, where all the control is basically done inside of a computer room, and that's it. There's nobody actually out there controlling the docks or the cranes. It's kind of wild. Take-Two has been on my list. To be honest, I don't talk about it a lot because I don't. You have to project how much money GTA is going to make, and I think it's going to be in the billions, and I think you get a bump. But Take-Two is not a cheap stock either. I mean, it's a multi-billion-dollar company. It's a lot of speculation, if Take-Two takes a massive dive, I think it's a good buy. I've kind of debated on, I think there'll be some hype and some growth to it, but I don't know how much valuation it can really add to the bottom line, because GTA still has made a lot of money. I mean, that company makes quite a bit. Late stream, always a late stream on a Sunday, my friend. Thoughts on covered call ETFs. Let's get into it a little bit here, because I do want to kind of reround the conversation to what a lot of people were asking me through the week, as I talk a lot about dividend stocks. Like, Kyle, can you make a video on this whole debate on how dividend investing is stupid? The lazy Canadian investor has a ton of videos against it, as well as Stock Trades Canada. I mean, Strongman Personal Finance. I can name like a dozen YouTubers that are so heavily. I mean, everything money was against, all these stocks, and now they're buying SHD, which is hilarious. I think it really depends, because most of the hater comments on dividend stocks comes from one of two vantage points. My vantage point is that total returns in your early years of investing matter a lot more than just dividend income. So if you're not going to use the dividends, I wouldn't make them my core focus. But again, if you're in retirement, I think dividends start to matter a lot, especially if you're looking to utilize that cash flow at some point in the future. You want to use it to pay your bills sooner rather than later. Yeah, you're going to want to pay attention to the dividends. But most of the complaints that you're going to hear about is it's tax inefficient, because the company has to pay income tax on that, then they pay it to you and you have to pay tax on it. Whereas that's kind of stupid, because the companies typically get a discount on the taxation of free cash flow they're paying out. Actually, I think in Canada, if you pay out cash like to investors, it's mostly like 100% tax write-off. Like, I don't really get the whole, it depends on the state where you're talking about it from. And then even on the personal side, most people are buying dividend stocks in tax advantaged accounts. So you're probably not being that tax inefficient about buying them in the first place. And I get it. Like, SCHD has been getting a lot of hate because it was underperforming the market. So everybody was loading on it because it was an easy video to make to get clicks. But at the end of the day, SCHD holds a lot of great stocks that are starting to perform pretty well. But again, I don't believe SCHD or dividend stocks should necessarily be an end-all be-all solution to investing. But what you're going to notice over time, because most people that I find even land in the dividend category are also a bit degenerate, like gamblers to some extent, because I mean, you really end up falling in a category where you just continually chase individual stocks till you start underperforming, and then you wake up to the realization, fuck, it's hard to outperform the market. And then you become what most investors become, like me, when you've done exceptionally well or you've built mass amounts of wealth and it becomes a bitch to manage. You're going to become an ETF investor, and that's what happens to all of them for the most part. I mean, even when I look at a lot of the Palantir pumpers and so many people out there talking about individual stocks today, they don't really tell you that it's like the smallest percentage of their portfolio. I have a hard time believing that a lot of these big Palantir investors out here that I see on YouTube, or even Tesla, a lot of these guys, they've all shifted to ETFs. Like Brandon Beavis is another big one in Canada here, and he used to be all individual stocks. Now he holds a broad-based global ETF and then 2 S&P 500 ETFs. Same with PPC Ian. Right now he's buying SCHD, and he says he wants it to be like half his portfolio in the future or something like that. I feel like at the end of the day, like that's what it mostly ends up boiling down to. I feel like a lot of individual stock investing is a young man's game where you got a little less money, you can take on a little more risk. And if you have a lot of money and you just like to gamble a little bit, then you're buying Palantir and you're buying, some of these individual stocks, Facebook, to try and boost the portfolio a bit. But at this stage in the game, like when you're doing it for so long, you just watch failure after failure. And I feel like that's what happens to most people, especially people in the dividend game, right? And we'll talk about one of those dividend stocks that you can look at it from both ways as a failure. But if you're in retirement, it might be doing you pretty well right now. And that has to do with the earnings that are coming up for Pepsi. We actually have some earnings next week, which is going to be super interesting. And Pepsi's going to be playing in this game. And it's going to be probably the only one that I really care about this week. I mean, yeah, if you want to care about Delta, some of the MJ stocks, BlackRock and Wells Fargo should be fun at JP Morgan on Friday. Those are the banks that usually always post the earliest. But Pepsi, I know a lot of Pepsi fans. I am still a semi-Pepsi fan. I used to own the stock, but I think, is it not in SCHD? Is Pepsi in SCHD still? I think it is, isn't it? But Pepsi, it has like one of the really fun long-term charts that just looks incredible. But when you start zooming in on like a 5-year, it gets very underwhelming in comparable to tech and, the S&P top 10 and even the S&P in and of itself. So this is what's really been turning people off from investing in dividend stocks, right? And I just want to run through some metrics and give you an idea of like, this isn't a bad stock to hold. It's done very well over the last decade. It's just been kind of, sidelining a little bit in this tougher market environment. And that could be debated on their products are too expensive. People aren't drinking sugary drinks as much. I mean, I am not a forecaster of these products, but I think Pepsi has a pretty wide diversification that keeps them relatively stable. And it allows them to kind of keep increasing the dividends, which, I think their payout ratio is like 75%. But I mean, over the last 10 years, you've gone from about 50 cents up to $1.36. So, that's really not bad. I mean, you're over doubling your dividend in a decade. And this is why people own these kind of stocks, because you start with a decent yield right now at 3.2%, which I should point out in its historical, in the historical dividend yield of Pepsi here, it's kind of insane because anytime that it's been paying out over 3% is usually a buying opportunity. Again, I don't want to state this with all stocks. It is a kind of fun little indicator if you believe in these companies long term, like Starbucks and all these companies, because they go through these ebb and flow cycles where like the dividend goes up, right, with the share price, which is why the yield remains the same, because if they're increasing the dividend, it means their earnings are probably better, which means the stock price is going up. So that's how you get the best of both worlds, and that's why the yield never really goes up. Typically the yield only goes up when the stock is having a hard time in the marketplace, and anytime Pepsi's had a harder time in the marketplace, the highest their yield got was 3.5%. Anytime it spikes over 3%, it usually comes down and the stock starts to perform better. So we'll see if that's the case with Pepsi here. I find it really intriguing. But again, Pepsi has this wide variety of products, right? Like I think this is a staple. It's something that every dividend investor looks at like 10 times over, because you get these huge diversities across the entire globe, with North America making up 61%, apparently international at 39%, both making up like that's a total of $91 billion or something crazy like that. Like it's a crap ton of money, right? You could debate these products. I think Pepsi, when I read out their roadmap, I'm not like super excited about it. I mean, if you're really into reading the investor presentations, where's the roadmap here? They give a little bit of insight into like what they think the future is going to be or how they're investing for it. And it's, I'm probably past it already, but I really thought it was in here somewhere. Yeah, so it's right here. We will advance our consumer-centric innovation capabilities. This is their innovation. Cross-sell exciting products across the portfolio. You do promotion by selling Mountain Dew and Doritos? And again, this is like the worst shit imaginable. This is like kids' dream right here, because I can't eat shit like this anymore. I had like Takis and I ate half a bag and I feel like shit. So I'm not down in Doritos. But however, I do have one Pepsi product that I'm eating right now, which, I do like the bubblies. This is the once you get too old as a millennial and you can't handle pop anymore, you're not drinking Coke Zero, you're switching over to the bubblies, which I believe is a Pepsi distributed product. But still, like there's nothing like, I don't think this is that incredible. Make your own beverages. This has been around for a while. There's no innovation here at this point. And I think the innovation they should be focusing on is branded products, like anything Mr. Beast is doing. Like if I was Pepsi right now, I'd be, how do I get into Logan Paul's pocket? How do I, get into Prime? How do I get into these actual brands that are growing incredibly well? Though I think they do have some distribution rights, or they have some extent with Celsius. Like they are investing in some of these other products as well. But yeah, I don't know. It's not exciting, right? But this is what people want to buy these things for. So, I mean, you get, revenue growth has started to take off, and then now it's slowing down again. They had a great time coming through the hype cycle of 2022. There's nothing like crazy here. The price to earnings is at an average for the last, roughly 10 years. It tends to hover around this 20 mark. Nothing incredible, right? So this is what you get when you're investing in dividend stocks. Super underwhelming. You get not even at this point, market average returns. Yeah, there's nothing crazy about Pepsi, right? This is why you have a hard time owning these, because if you're just like, hey, I'm just going to buy Pepsi and Starbucks and McDonald's, and how well is your portfolio done? You're probably not like the happiest investor in the world right now. So it's a hard debate on how to balance growth with income depending on where you're at. So any thoughts on XDIV instead of VDY? And someone commented already that both are good. And I've actually debated on, and I still might at some point, my parents own this stuff. I'm debating on buying it just to bring down my exposure to Royal Bank in VDY. Because the problem is I want to get like 100 grand in VDY. But if I do my 4-fund strategy here and I end up overloading and I put 100K in VDY, I think it should make Royal Bank the largest position in the portfolio, even if I have 200K in the S&P 500. And that's just because of the absolutely massive weighting that Royal Bank makes at 15.82%. So I'm always a little concerned, because I'm like, I want a lot more VDY. But if I literally make it 25% of my portfolio, it's very likely that Royal Bank immediately becomes the largest position, which is probably not the worst thing in the world. Like, it's not like a terrible thing. It's just that XDIV has like a weird version of concentration where it holds a lot less stocks. But the stocks it does hold make up a more equal weighting. So you've got mostly financials with, Manulife, Sun Life, Royal Bank, Toronto Dominion. And again, you got to be a little careful, because the reason Manulife and Sun Life have done so well is because of the higher interest rate environment. These insurance companies that sit on just insane amounts of cash, they've really exploded You know, I mean, Manulife just went bananas. It's been like one of Canada's best performing stocks. Sun Life's at an all-time high. Like they've done very, very well. But again, that market environment's going to start to change here. So I don't know if I want to overly focus making, 20%, investment. But again, they're all great. There's nothing wrong with them. So you could cost average into these until you die. You'll be fine. There's no worry about it. Chasing the highest yield is a common mistake in dividend investing. I learned that the hard way, lol. You need to invest in companies with strong balance sheets. Then dividends grow and stocks appreciate. Yeah, I think people appreciate appreciation. I think appreciation, but then again, some people over appreciate appreciation because then they just go purely into growth and they go like crazy triple leverage degeneracy, like dumb money. I love, I feel like when you listen to people like Graham Stephan or, and again, I try and separate myself a little bit because I've worked very hard for a living. I'm not saying none of these people have worked very hard for a living, but like when people like dumb money, and I watched a video of Chris Camillo going on about how like, anybody can make millions of dollars in the market. They just have to find a trend like he did, where he like leveraged 20 or 30 grand and turned it into friggin' millions of dollars. But it's just like, how many like 99 out of the 1% of people are able to pull that off, go broke. It's like, same thing with Graham Stephan when he talks about how easy it is to just start a YouTube channel and just, make all this money. And it's like, I just don't think some of these people, they get disconnected from the reality of the situation, that it's just not that easy. And I've had to keep my head down and grind my ass into the ground, and I've been very lucky to be in the situation I'm in, but I haven't had that kind of luck where it's just like one trade to $1 million, or hey, I started a YouTube channel at the right time and I have 1 million followers and I'm able to make 20,000 a month off just AdSense or something crazy. I'm like you guys. I'm sure most of you guys have to actually get up and go to your jobs. You have to like double up your income and, put as much away as possible to get to these positions. I've had some good trades for sure, but nothing. I think some of you guys in my groups have had way better trades off the same stocks I've traded than I've had. Because I think the most I've ever made off a trade was maybe like 40 or 50 grand. But I know people in my group and people that watch these videos that have like banked $500,000 on like MindMed. And, some of you guys banked over $1 million on Tesla. And I just didn't have the balls to be that aggressive when I probably would have been better off. But again, you get into that mode of degeneracy where you think you can keep doing that. And instead of building a diverse portfolio, you end up thinking you can always triple leverage your way up to something. And, before you know it, you do great. And then it just takes one or two bad trades to blow your account up. You got to always keep putting that money aside, baby. My best trade was Carvana. How's Carvana doing these days? Let's take a quick look. Carvana. My best trades were the most boring stocks, and if I just kept them, I'd still be doing much better than I am now, but I just don't have the same kind of risk tolerance that I did. Carvana's doing very well, man. I mean, year to date, 264%, really coming out of that crash, clearly got into a bubble-ish territory in 2021. God, 98% crash. God, that hurts. 3,000% from the lows. Man, I'd love to read this story. I've never looked into Carvana that much, but what a hell of a story. Holy shit. What a ride. Is this a meme stock? Like, what's with the volatility here in the business? Thousands of percent just within a couple of years span, man. Drop 98%, recover a few thousand. God, that's wild. Going bankrupt is not investing. It's a lot of people's. Again, like I said, I think in the last stream I told you guys to go check out some of those YouTube channels where they talk about Wall Street bets. I still love. There's a lot of degenerates out there still. My best trade has been Bitcoin. Yeah, I can't get into Bitcoin. I think the altcoins are better. We own some Bitcoin, but I think Bitcoin's been stuck in the 60K range, hasn't it? Let's take a look at the coin market caps. I just don't like this shit that I feel like I have to trade it to make money, and I just haven't been able to like focus on it enough to want to trade any of the altcoins right now. I think the only best things are Solana. Like, you really want to play the lower half of these coins, because Bitcoin, if it makes any big move, the lower halves just pump. And it's just trading, right? Like, I can't look at this in any other way, because there's no like fundamental business that's really rocketing off the back of blockchain yet, which is sad. I mean, it's kind of a shame that right now it's basically just a buy and hold software. And there's some games and there's some stuff being worked on, but nothing is like materialized to a level where we have microtransactions being done through the bank with the back end rails of crypto. Like, that's what's coming. There's a lot of big companies working on this shit, but I haven't seen it, right? Like crypto, I can't get over how we can make the rail system so cheap on the back end of like, basically just an advanced Excel spreadsheet, your ledger. But I just can't figure out why in this day and age still, though, if I go to a small town, if I don't buy something over $5, they won't accept credit card. because it's just too expensive. Like MasterCard and these Visa, like these friggin' ATM systems are such a fucking ripoff. And it's crazy that that's the rail system that still exists, even though crypto can do a better job of it right now. Are you guys all in on XEQT? XEQT, baby. Let's take a look. Isn't that just the core equity ETF? Doesn't just give you that wide variety? It looks like it's kind of just underperforming the market, but I think that's because it's a broad-based ETF, isn't it? If I was, a little less degenerate than I am with my concentrated ETFs, I would probably be more into diversifying like this. I just don't like the idea of underperforming because I don't know. Like I said, I'm still somewhat of a degenerate, and I still want to fast track my independence. And I feel like you could just focus on the S&P still, and you're going to do much better to some extent than you might with China stocks. Though China could have a bit of a comeback here, because I mean, you're basically just buying the United States and Canada. So this is basically representing most of my portfolio. I just don't care about the rest of the market. If, like I said, this is more of like a wealth preservation strategy for me. For most people, it's the most appropriate way to invest, and it's probably the smartest thing you're going to do. But for me, I'm like, I just want to upperweight the U.S. stocks, keep some tech in there with what the wife has, just so we keep accelerated growth, because hopefully tech still accelerates the way it is. But yeah, this is the way to do it. This is probably the easiest way to do it. Just go do your job, double up your contributions to this if you can work a bit harder, and you'll be set. You don't have to chase too much. What are your thoughts on Sobo's split shares for TC Energy? We can take a quick look. Explain to me what this is, though. So you're saying, what are your thoughts on Sobo, the split shares for TC Energy? What is Sobo? TC Energy, what's the relation for that? Can I just look up like a news article or Sobo? TC Energy, the Southbow spinoff. I don't know. I haven't looked into this. So TC Energy successfully completed the spinoff of its liquid pipeline business. Southbow, the spinoff was the result of a thoughtful strategic 2-year evaluation and is in line with TC Energy's long-term strategy, enabling an increased focus on complementary business lines, natural gas storage. Everyone's really pivoting to natural gas, even Enbridge. Our extensive natural gas infrastructure and power generation investment position us to be in the forefront of North America's energy future. So it seems like, yeah, I'm curious to why they're getting away from. It's interesting. I have to look a little bit deeper into it. I'm kind of curious to why they're spinning off their liquid pipelines to focus on natural gas, because those liquid pipelines, man, they print. Do they print when oil's? Well, they print either way. It's funny. It's like kind of adjacent to the oil. It kind of, like I said, Enbridge is a little bit less reliant on oil prices, even though they do a lot of oil related stuff and storage and all that, whatever. But I mean, they own the pipeline, so they're getting paid no matter what. Cameco uranium has been my biggest hit. You got in the uranium space, man. Whew, Cameco. I've been looking at things like UEC. I don't play the commodities, though. This thing has been wild. The whole uranium space is like, I can't figure out why the gold space hasn't jumped up as much. And I think uranium is starting to have a pullback, isn't it? How's uranium? This one hasn't moved that much this year, but it had its big uranium rush. What's uranium at right now? Yeah, the weird thing with uranium, I talked to a guy about it. It's very complicated understanding, the supply and demand metrics of it, because it gets bought in bulk and then it goes mostly into storage. And there's companies that specify in obviously building out like the uranium rods for power plants. It's a very complicated, tricky thing. I missed the boat on Cameco. Really disappointing that I kicked the tires. I really shut up. Yeah, I mean, it's not like a crazy movement though. I wouldn't get like, it depends on when you were looking at it. Like, when did you look at, because these things go through cycles. I don't like commodities because of this volatility, right? Like, here's the last uranium cycle, and then the thing went like nothing happened for the longest time. And then in 2020, did you really think uranium was going to explode like it did? I mean, I don't think even the people that worked in uranium thought that this kind of rally was coming. But yeah, I mean, anyone that had the guts and the foresight to hold it this long have done exceptionally well. But you could have said the same about lithium, right? Like, I mean, look at the lithium space. I can't get over that Lithium America Corp is back down to the price it was when I traded it like a friggin' forever ago. I think there was some time back in 2014 here where I actually traded. I looked at it in my account, and I think I was trading it for like, I don't know, 80 cents a dollar, somewhere back here. And then it ran up to $2 or $3, and I was like, I missed the run, and I'm so annoyed. And here it is at like $1.50. And then like in 2019, everyone's like, oh, look at this, it went crazy. And I was like, I can't believe I didn't just hold it from my 80 cents. I'd have been up like 500%. And then it just went like bananas, and lithium went absolute ape shit. And now look at it. It's like lithium had like the hardest crash imaginable. Look at this, down 82%. it's the same thing with like some of the cannabis companies too, right? It's like the just the hype of some of these things are just wild, and you just don't know what ones are going to last and what ones aren't. Look at this. Look at what happened to this. I can't get over it. I think China has a lot to do with this. China's outputting a lot of lithium. I really don't know what's causing this. Like, this is what's helped though bring down the price of obviously EVs and a lot of stuff. I was going to buy 2019 and then changed my mind. Lol, that hurts. Yeah, you don't have any regrets in investing though, man. I wouldn't look back on it. I mean, there's a lot of if, ands, or buts, but I'm sure you're in a good place. I mean, I think anybody that's probably watching this is in a much better place than where they would have been if they didn't get into finance. You're my favorite clown on YouTube. I appreciate that, brother. I appreciate that. What else we got going on here, folks? My best trade, yeah, Carvana is crazy. Still watch Jeremy. I watch all these guys, man. I love seeing the degeneracy of us influencers and what's going on out there. Honestly, I think Meet Kevin's my favorite, though. I think the guy is just, I mean, he's the same age I am, and I have like a few screws loose, especially my working habits, but he's just like plateaued into another level of just, I think he wants to be like, he wants to pull off, I think like a 2008 style, Michael Burry like event. And he just wants to be right. And just like, I don't know if he's a clout chaser. I honestly don't know. I just look at his PP ETF and I just love watching it underperform the market because like he hasn't actually updated the projections, or like, I don't know how you don't get sued for it. I really don't. I don't know if somebody has to agree to a terms of service or how the fuck you can set out to have like, it's like buying SCHD for a passively weighted Dow Jones 100 dividend ETF, focused stock portfolio. But with Meet Kevin, he's like, we're going to own these specific stocks. We're going to focus on innovation. And now it's like, let's short the market. Let's buy treasuries. Let's short Bitcoin. He's like, look at, we're shorting Bitcoin. We're buying gold. We're getting into United Treasuries. It's like, what? What? And if we scroll up, you can still read that, it's funny, because you can read through his whole thing here, and it just explains how they're into electric vehicle companies and innovation and pricing power companies. Look at that pricing power. It's like you haven't even updated the website and you're selling a whole different slew of stock. I don't know. I get a good laugh out of this stuff, man. I think it's funny as hell. Trying to keep it conservative while getting some very modest gains. Yeah. If you got decent money, conservative is good for the most part. I think if you're younger, I'd be a bit more aggressive still, though. It just depends on how much you want to look at stocks. Because like I said, when I was younger, I was very aggressive, but I didn't have a lot of money. So it felt right. To be a little more aggressive. What are your thoughts on, I don't like these. Don't buy these things. These are garbage. TSLY. Everybody, when it comes to these, I don't even think for my parents, I don't even think in my parents' portfolio we own any option ETFs. I mean, look at the what's the year to date? We're down 46%. And what's the payout ratio so far? Like, I mean, there's no way you're outperforming the market with this. I refuse to believe that, this option strategy that's just making these like I said, when it comes to options, I always kind of reduce it down to the same point. Why pay somebody a huge fee to do it yourself? If you're going to be buying option ETFs, then you need to explain to me how options work, especially these option strategies. And I want to see you implement it yourself before paying somebody else to do it. Because these yields are just, the last 30 day is 3.09%. The distribution rate is 111%. Yeah, it's crazy. That's crazy. None of this shit's consistent. Do they show a total return? I'd love to see the total returns on this here, right here. So the 1 year return so far, the total return is you're down 3%. Since inception, cumulative your annualized return on this since inception is 3.2%. And since inception, you're only up 6%. How long has this ETF been around for? I mean, the 1 year rate of return is garbage. The 6 month you made 22%. The 3 month you made 7%. The 1 month you made 11%. But since it's been around, you've made dog shit money. So this is why I don't like it, because you think you're doing something better than you are. I mean, how long has this been around for? Not very long, since 2022. So since inception, I mean, again, do you enjoy underperforming the market, not getting like, a 6% total return is not terrible. Annualized or whatever it is, or what was it? What did we say it was? Let me go back here real quick. Oh, too far. Yeah. What was it? Since inception, cumulative 6%. Yeah, don't get fooled by this shit. Always look at the total returns. It's just it's never as cheery as you might think it is. How much do you think you spend on trading fees? I spend a lot on trading fees, which is why I try and only do big trades. I usually don't invest less than a couple $1,000 at a time minimum. Because usually I'm making pretty good money, and I'll build the account up a bit. Because I'm paying $10 in a trade, which is a lot, but I like using my banks because Wealth Simple doesn't allow it doesn't really allow international, or doesn't allow currency exchange very fluidly unless you have like a huge amount of money with them. Like, they're not great on everything. I still like the banks, and I have my money with like 3 or 4 different banks. I think we have CIBC, we have TD, we have Royal Bank, and I have Scotiabank. I think TD's with our mortgage. The wife invests through TD. She has some of her retirement accounts through CIBC. I have Royal Bank for my corporate accounts and my corporation. I have Scotiabank for my personal trading accounts and my tax advantage accounts. So yeah, I'm getting ripped off for sure, but I'm trying to. The Royal Bank's the best though. I like Royal Bank. Their trading platform's dog, like it's terrible, but they give me a commission. They don't charge me fees on money exchange, so my currency exchange doesn't cost me anything, which is awesome. How about National Bank brokerage? I don't use it. Do you use it? Is that any good? I'm going to say that I really like TD and Scotiabank. From what I've seen, have the best online platforms. I love their trading platforms. They're very great. But Royal Bank, I think, has the best customer service. I think their trading platform's garbage, but I just think they have a lot of really good corporate benefits, especially if you do a lot of international stuff. YOLOing $1,000 into each of NAC and Cruise make me money when the politicians do lol. I have a bet actually with some buddies. We're betting on Kamala versus Trump, just as a joke bet. It's a very small one. I was debating on actually taking a bet up on the betting sites, but I figured it was funner if me and a bunch of buddies get together. So I think there's 6 of us right now, and we all have we had to get 6 of us because in the beginning too many of us were one-sided. So we found 6 people where 3 of us are on one side and 3 of us on the other. So we equally split the pot. We're very much looking forward to seeing the November election, which, by the way, I really want to get over this shit. I am so tired of it. I mean, I'm sure you guys recently saw that, Musk is a brilliant idiot. He pissed off the Democrats with his love for Trump, and Dem voters are never going to buy his cars like they did before. I mean, Trump was just, announcing Elon at one of his rallies, and it was so cringy to watch. And I'm just like, man, why? Why does Elon have to divide his audience and get political? I mean, I think Elon's next ego play is to get into politics. I think, as a billionaires want to get in politics. It's where they can make the most change and feel like, they've pinnacleized themselves. So I feel like that's Elon's next bet. He's already going to Mars. He's already started the largest car manufacturing valued company ever. He's in the US. He's basically done with that shit. It really feels like he cares more about politics today than he does most of the businesses that are self-run by the management that's there. But I can't wait till it's over, man. I am so tired of politics. The problem is, as soon as we're done with the US ones, then we got to deal with the Canadian ones. I mean, you guys have the same heated debates. We have very cordial debates about it. And my friends and I are very, opinion divided. And I always come down to the same point. Like, me and my friends really kind of conclude that, look, politics have no base in the reality of how we live for the most part. When you go out and you do your job, is Trump there helping you do your job? No. Is he really supporting you, the GDP like you are? No. I mean, realistically, he's not the one that is fabricating the best capitalist society we've ever had. You are. When you go out and do your job, when you go out and you support your family and your community, and you do good and you don't rip people off and you don't con your taxes and try and rip people, that is you supporting society and building up everyone around you in GDP. So politics is just a hearsay thing that doesn't have, it's just roads. They should just be roads, army, the usual shit, but they're not. And I hate how it's more about, it's more of a popularity game than it is politics these days. So we get divisive about it, but hey, at least we're friends and we're like, we can agree to disagree, but understand it doesn't really matter. So it doesn't like ruin our friendships like it does with a lot of people. But thanks for the information about it all. Inflation affects us big time. Yeah, it does. But that is definitely government inspired, which is a huge annoyance. But it also came on the back of this is the funny thing too, right? Like, was inflation like did a government really have control over inflation? It was like the Federal Reserve, right? I mean, these governments they didn't have a choice. It's like it wasn't any one person's fault to think that we are going into an economic crisis and GDP and job loss is spiking in ungodly levels because of a once in a generational pandemic. So we had to print ungodly amounts of money to support the economy. And I get it. And that led to inflation, right? But there was no like a determining factor. And I hate how Trump is always like, oh, well, I'll come in and I'll make fracking cheap and we're going to bring down oil prices by half and it's going to fix inflation and bring down the price of everything. But it's like, but oil's like one of the biggest businesses in America and globally. And if you crash the entire price, you're going to bring nations to their like, you really think that's a good, like, do you not want jobs and prosperity? And like these companies need to make money too. Like, where's the happy medium? How far down does oil have to go before it starts affecting companies at a global scale? But how far can we let it go to bring inflation down? I think oil's at a good price. I mean, oil's down enough. Inflation's back to 2%. I think we've done the job. I don't think inflation, like, we can't reverse pricing. We can't go back. If we go backwards, then hello to the next depression. You really want to see an entire generation lose the value of their properties? Like, you really want to go back to where we were? We can't. You'd literally like destroy an entire generation's retirement. So we're kind of stuck to where we are, right? We just don't want it going up anymore. We want inflation to stop going up and pricing to stabilize. We don't want pricing going down from here. That means we're in a very shitty economy. It's a hard balance, but I don't think politics plays as much of a role as we like to think it does. We'll see though. Then again, the money printing obviously did, but again, it's one of those things where they didn't have a choice. Crazy inflation and interest rates are directly from politics. Yeah, but it isn't, right? Like, so imagine we didn't print ungodly amounts of money during the pandemic and everyone just got laid off. They couldn't afford to pay for their shit. Like, where would the economy have been if it wasn't for printing the money, right? That is the only thing that caused inflation. It wasn't because of low interest rates. It had everything to do with just ungodly amounts of money printing. They like doubled up the money supply in like 2 or 3 years. It was stupid how much money got printed. But again, what would have happened if we didn't do it? I took the benefits. Like, I took government stimulus. I lost my job because of the pandemic. A decade career of mine went down the toilet in 3 weeks. I watched thousands of dollars of contracts dry up. Like, heaven forbid, thank God. Like, my dad was fine. Like, I was living with my parents at the time. So it was like, I was good. But heck, if I was living on my own, it could have been a wildly different story for a lot of people that had kids and were living paycheck to paycheck if it wasn't for stimulus, man. It could have got real bad, but it didn't. And now we have to deal with the other shit that comes out on the other end. And again, the real estate thing is debatable. I don't think real estate prices necessarily went up as much as they did. It had a lot to do with low interest rates. Money printing, I don't know if that had as much to do with it as the demand. Like, supply and demand runs real estate, and we just don't have enough supply to meet the demand. So that's how we got to insane levels of pricing, depending on where you live, because there's still cheap areas to own real estate. How much CERB money do you think is sitting in people's TFSAs? Well, I put almost all of it in my TFSAs. I actually had to pay a bit of it back because I got a job at the end of the year, and I knew I was going to have to pay some of it back because I think by the end of the year I ended up making the minimums, the minimum barrier before I wasn't allowed to collect it. So I think I collected like 14,000 or something, and I paid 2,000 of it back, something like that. Again, I wasn't, and again, in my situation, I could have easily, like, to avoid the inflation, I could have given all the money back. It's like, I didn't need it, but I was entitled to it. So why not take it? I was one of those people that got screwed. Why do you think Canadian productivity is declining compared to the US? I think, tough debate, man. I think, we need more innovation. And I think Canada's a weird place, because we're mostly commodity focused. And like you said, we're a country, like Kevin O'Leary says, is unfortunately run by idiots. And we lack severely in a lot of things when it comes to, I think, good policy. We could still be a powerhouse if we just had better housing policy. I mean, there's so many policy. I think most of Canada's problem. I mean, talk to even miners right now. Like, I work with a ton of mining companies personally, and the biggest complaint I hear is this ESG bullshit where they have to go out and they have to protect this. There's like, oh, these specific plants. You have to prove how you're not going to get smoke or dust or anything on these plants. And like they just, I know people struggling right now to get permits on what could be some of the most valued mines in Canada. Like the Canada just doesn't want to progress the policy that gets the jobs hired. And I get it. Protect the land. Oh, we protected one little tiny $20 million mine, but meanwhile half the fucking forest just burnt down. And it's like what's this ESG garbage that's preventing all this innovation when like there's so many forest fires? Like innovation is going in that direction anyways. Why do we have to carbon tax? Why do we have to do all this shit that also inflates the economy? It just, I don't know. You know, we know where the election is going this year, but I think productivity really, again, does stem from a lot of policy issues here. And that's where it'll make a big difference on like where the economy goes. Because obviously like housing demand isn't being met and housing is at a standstill right now. I mean, it's crazy how much housing isn't being built and how much isn't being sold right now just because of the interest rates. And, you know, we're cutting off foreign money. We're starting to cut off a lot of the immigration stuff. So that's going to halt a lot of foreign income and all this stuff. The best thing about Canada is that it's the easiest country to get rich in, and it's probably one of the most desired places to be on the planet because of our diversity. So, I mean, it's weird. It's like, you're better off working in the US, but you're better off living in Canada. I think Canada's living standard is a lot nicer than it is in the United States. We just don't have the same kind of big business that the US has. I mean, look at the comparables. Royal Bank, right? We're a much smaller country, obviously, as well, like population wise. But when our biggest company is only worth what's Royal Bank worth today? Let's take a quick look here. Royal Bank, what are we trading at today? I think it's at over 200 billion or something. Yeah, I mean, Royal Bank's worth 235 billion, and Apple's worth what? You know, Apple's worth a whopping $3.4 trillion. Like, we definitely don't have that kind of power. Low cash, high debt. What are we talking about here, folks? ESG scores are starting to fade. Corporations exist to make money. Pandering to ESG scores is a great way to bleed money. Yeah, no, that's true. Like I said, I got nothing against it. I believe the environment's getting fucked by what we're doing. I don't think anybody's arguing that. And I think we're starting to realize it and we're waking up to it, and people are making innovations and we're starting to fix it, and people are voting with their money. But I don't think the government should mandate, how money gets spent when it comes to ESG compliance and stuff like that. I think the government can offer incentives. I think that's good. I just don't think they should be charging us for it. You know, I don't think they should be carbon taxing and all this stuff. You mean the wealth redistribution tax, taking money from people who produce and giving it to those who don't? Yeah. I mean, that's what they're doing with it, right? I mean, carbon tax, like my parents, for example, they installed a new heater on their house and it cost like $8,000, but the government reimbursed like almost all, like 6,000 or 7,000 of it, because like if you and it's a ripoff too, right? Because these companies are taking advantage of it because they know the government subsidizes it now. So they're going to overcharge for these products. Like, it's a very fucking weird mixed game when it comes to how carbon tax money and ESG oriented incentives work. I don't like it. It's very confusing. RioCan or Canadian apartments, in my opinion, be careful with the smaller REITs that have high yields. They are often unsustainable. Yeah, REITs, man. We still got a RioCan. We still got some stuff. I'm surprised how well some of the malls are doing in those reports that I've seen, because I walk through the mall some days, man, and when I look at the amount of turnover of retail business, it kind of blows my mind a little bit. So yeah, we'll see what happens. Retail is interesting. It's a very odd game, and RioCan has been not doing the best over the last 5 years. I mean, the best time to buy it was in the pandemic. You buy the dips, you've done pretty well, but you got to be a little careful because Canadian REITs, I like Cap REIT a lot. I like some of the Stag Industrials of the world in Canada. Granite REIT's pretty nice. But yeah, I don't know. I just be careful with these. They underperform the market for the most part. Canadian real estate has not been the best place to be unless you own it individually. If you've owned Canadian real estate, you've crushed it. If you own REITs, the performance has been not the greatest. I get my next carbon tax check next week. Can't even buy 2 shares of ZSP with it. That's the fallacy of it, right? Is it's raising the gas prices, which inevitably raises the prices of everything else. So it's like, are you really saving any money? Anything you're going to get carbon tax rebates for, those companies, like with my parents' situation, they're just going to charge you more for those products because they know the government's subsidizing it, blah, blah, blah. It's kind of just a snake eating its own tail. Is it really benefiting anything? We don't know. At the end of the day. But on that note, folks, I appreciate you all stopping in this evening. There's 100 of you in here. You guys are awesome. I'm glad we can keep the drive alive, keep the hustle alive. Here we sit 10 years into my investing journey. I think 5 years deep into the YouTube journey. I actually 5, 6? Are we 6 years deep? We're almost 2025. Yeah, 6 years deep since we started this in 2019. So it should be fun to see where we keep going here. I look forward to, hopefully you guys seeing some similar growth. And yeah, it'll be neat to see where we end up by the end of 2025, because I think we're still on the cusp of what is going to be a hyper, like, I don't know. Do you guys think we're going to go into like a recession? You really think that we can't get the soft landing? You don't think, the data is going to, stay somewhat stable? It's just going to keep seeing a trend of unemployment rising, and we're going to get like a spike of just GDP dropping? I'm very curious. Because I feel like once interest rates drop enough, we are back to a full functioning, stable economy where small caps and venture capital can actually raise money and get liquidity. People that want to buy real estate can afford to get back into the market. I think we'll be kind of coming back around. At least that's my hope. I'm always a glass half full kind of a guy. Gold prices say little faith. Yeah, we'll find out, won't we? But I'll still be buying. What do you think of P. Diddy? Oh God, we're to this point of the stream, eh? Well, I never got invited to one of his parties, so I'm sure we're going to see some videos though. So we'll find out. Soft landings have been, yeah, they are rare, man. But if you're like Meet Kevin, then bet on it. I just want to see us to have a soft landing. I want to see Meet Kevin be wrong, and I just want everybody to be reminded how fugazi this whole system is. Definite recession. BOC did not cut quickly enough. Yeah, the U.S. is stronger than Canada right now. Time will tell. But I appreciate y'all stopping in. See you tomorrow.